Hey, good night, everybody. Still here, Daily Market Pulse. It's Wednesday, February 19th, all the way into the year of 2014. Imagine that. Okay, with that, stocks fall today. They were up for the better part of the day. FOMC came out. They hung in there for a fair amount of time and then sold off. You know, so we have a distribution there in the Nasdaq S&P. Whoopty doo seems like after all these days on the upside makes you wonder still, but I thought this was going to happen a long time ago, but hey, whatever. It is what it is. You just go with it. So now there's a sell-off. I'm still thinking there's more to come because obviously in terms of retracements alone, if you just think from a standpoint of mathematics, um, you'd expect a bigger drop, you'd think. So let's take a look at the charts. Okay, Dow Jones here. You can see there's a little bit of a decline. Remember yesterday, almost hot on me like formation. Now we've got the evening star. Evening stars are fairly reliable patterns. It was across that 16,200. I had that goal line there for a reason, and there's the failure back below the 50, back toward the 8 moving average likely, as well as the 15,935 level. That would, in terms of retracements from the original high to low, that would make that's back to the 50%. Not that that's necessarily what you want to measure by. You actually would prefer to measure by the recent move up like this, really. So now you've got the 764. The 618 is down here at 15,870, we'll call it. So that may make more sense. That would be the 20 that may start flattening, and the 50 of course still above. So you'd find the stock price might end up being kind of smack in the middle between the 50 and the 20 along with the 8 moving average. That would make the most sense. Logic doesn't always rule, however. So we'll see how that goes, but that's what I'm seeing here, at least for now in terms of retracements on the Dow. Let's look at the S&P. Okay, S&P you can see again hit the resistance level. That's essentially the peak, the pivot area that we saw back there at 1850. We had a little bit of a spinning top yesterday, made you wonder, a little fatigue maybe, a little bit of a potential sell-off coming, and it went higher after a lower open, went into the resistance and immediately reversed lower once again. So if we do the same thing as we just did with the NASDAQ, let's move this over to the peak of today. And let's see where we can read the numbers. Here we go. So then we're looking at a 618 back in here at about, what is that, 1804, 1805, 1806 area. 1806, we'll call it 1805.75, 1806. That takes you right between the 50 and the 20 once again. The 50% retracement takes you down lower below 1800. So I'm thinking 1800 to 1805, quite frankly, will ultimately be the big test. But right now into this first one at, well, it's right at 1805, I guess, 1805, 1806. That's about, makes sense. So going into that will make all the sense in the world. Moving averages are there, all going flat. It'll be kind of a critical spot to see what they do with it at that point. The window right below, just below 1800 as well. Okay, I think I had mentioned the Nasdaq. That was the Dow. That's what I meant to say earlier. Now we have the Nasdaq. The Nasdaq having broken out above 4250, holding at least most of the day with a little spinning top, kind of almost doji-like formation for most of the day until later when the sell-off occurred, and then it fell through and closed mildly. I'm not going to call it modestly or moderately. I'm going to call it mildly below the polarity of 4250, which may signal a falling off the roof, which tells you automatic sell signal at that point. And once again, if we go top to bottom, we're going to find the retracement of 618 takes you just above the window and where the 20 and 50 day moving average are. So this is 8 moving average would be the first place. If it holds there and bounces, then you know it's pretty strong. That's 4200. Otherwise, you're looking lower into 4130 to 4140, somewhere in there. So that's the NASDAQ there. TSX. TSX a little bit higher. A little bit of rejection, maybe the upper shadow, a little fatigue, perhaps showing signs there. So it may follow suit now at this point. It's been very strong for the longest time. As I recall it today, could have sworn gold was down, but what's really the strength here today was actually oil. Oil was strong. So that's probably where this is coming from right here, being that the TSX is very commodity rich. The DAX just perched right there at 9,600 at the former polarity area, or at least the former highs of the bearish engulfing back at the beginning of the year. Several kind of doji spinning tops here that we've seen. So profit taking at a minimum, a little pause, maybe a little refresh coming. Essentially, we're looking at possibly a little fatigue here. We'll see how that goes and works out. Let's see from here. Let's go to the US dollar, Canadian dollar. So there's the retracement. We talked about the possibility of 618. It fell through. Then we said 50%. And maybe the 50 very quickly, but right there at the 50%, it bounced right literally on it. 109.09. And that's not that super accurate, mind you, but the low was 109.09, oddly. It's exactly where I had it pegged. And then look at the huge bounce back into almost 111. Massive. So I'm only looking higher at this point, back to 112. With this very strong bullish engulfing that took up took up 1, 2, 3, 4, 5, 6, 7, 8, almost 9, 10 candles. Wiped them out. Pretty strong, pretty powerful. Zoom, zoom. You look at the euro, I suppose, as well. The euro was strong, broke out, and said that, even if it pulls back toward 137, you're still looking at a 138, 138 and a quarter target. Treasuries are a little odd today. Treasuries went up quite a bit higher, made a new high into 133.31, and then failed miserably back toward the 20, now going sideways. I still see this inching its way and going higher at this point. I still see that happening. That's still my expectation. So we'll see how that goes with target, of course, all the way back into 135. Let's take a look. The yen right now is extremely active. It's coming off really good support across here, 197 and a quarter. Went a little bit higher, came down. A little bit of a kind of almost like an inverted hammer here, telling you the buyers are at least present. You're getting an 8 and a 20 moving average kind of perched together. All the price action wedged tightly together as well. And right now we're seeing a little bit of a breakout currently. You see that right now it's at the session high, and it's making its way up. Right now you're looking at about a 98.15 target, at least initially. And that takes you, right about where the cursor is right now. But there for now, because there's an intraday pivot right in that area into maybe 98.20 or so. After that, of course, you're looking for the ultimate into 99 and a quarter, maybe higher. But that's the yen's looking pretty strong. And once just the yen is kind of like also the treasuries in that if it goes higher, many times you will see the markets going down. Let's take a look at gold. Okay, so gold came into 1320. That was in the exact pivot area. That was also an exact measured move. Reversed somewhat, had a spinning top yesterday, came back here, a hanging man today, and then look at the gap down today on the open on this after hours gap right into the 200. So looking for an 8 moving average or some kind of a percentage retracement at this point, maybe 1300, but ultimately looking for 1360 on a rebound on a next buy signal candle. And when you look at the silver was lagging. And then what you see in gold right there, pretty much silver took care of in 2 days. Gold took almost a week and a half to accomplish. So boom, boom, right into its target of exactly $22. That was the measured move. And then you've got the hanging man here as well at resistance, which usually sends red flags that there's likely downside coming. So if we go to crude, we saw the big move yesterday and then today kind of a spinning top. So when it gapped higher, dropped, went up and higher again, made a new high into 103 and some change, looking for higher. I see 105, then probably 108, and then maybe 110 in that order over the course of time. And there's the current candle right there, just kind of pausing, holding for the time being, not doing a whole lot of anything. But that's what I see in oil after those 5 consecutive kind of doji high wave formations. Natural gas, out of control. So we knew that natural gas made a big move. That's kind of parabolic, so it pulls back into a support area right here and then bounces, and then you see that nice move. Target becomes, of course, the previous high of the dark cloud cover at 545. It almost reaches it there and then hits it there and then plus. Then you have the ultimate high all the way up here at 575, and it just blows through that. So pretty amazing, I'd say. Pretty amazing. So that's phenomenal. There's your rounded bottom and then blow through everything. So that's natural gas for you. Looks great. Let's take a look at small caps, because the small caps, as I was saying so many times, small caps to me just were still lagging and not showing the true risk on. That's why the whole thing became very surprising. But it did manage to get very close to its pivot peak area, 116 plus, 117, then reverse with a bear sash today back to a former low pivot area with room still to the moving averages, which would make the most sense. That probably coincides reasonably well with a percentage retracement as well, which I'll do that right now. So you're looking at the 76.4 right now. You're looking at the 618 down closer to 112.50, and then just below 112 for the 50%. Look for those levels on the way down. I would think that the 618, where the 20-day moving average is right now, probably makes the most sense. All right, from here, let's go to the VIX, because the VIX yesterday was active and today even more active. So I said yesterday, almost like a hanging man where the bulls were present. It gapped up, went higher, did fade lower, but it still finished green for the day. But it almost gave you the impression that the bulls, or at least buyers, I should say, or bulls, or the bulls in general, but bulls are most regard to equities, but in this case, buyers of the VIX of protection were present, anticipating something. And it wasn't a lot, but certainly today was the confirmation. It gapped way higher, it gapped above yesterday's high, above the, essentially into the 15 range, above the window, faded for a part of the time when the markets were going higher, which to me made no sense at the time, but that's what happens. They just control it, they take it up, and then they wipe everybody out. It's essentially a head fake of sorts, and they sucker everybody in and they wipe them out. And they snatch up all their shares at a higher price, and then make more money on the way down. So in this case, it went lower above 14, however, and then it finished almost near its session high at 15.52 in this case. So room, as I said yesterday, into 17, which is where the window is. So that's going to happen as early as tomorrow even. So I'm looking for more action there, and Friday possibly to get us there, and maybe higher potentially, maybe as high as 19 for that matter, but we'll see. But this is looking like a pretty decent bounce here, based on what we saw. So if the markets go a certain percentage retrace of 618 or 50%, then we'll see something similar in terms of the VIX on the way back up. The window makes sense right now at 17 and maybe 19, but that seems a little much. Okay,